It's been 1 month since the deadly Easter Sunday attacks in Sri Lanka that killed 258 people. With growth, especially in the vital tourism sector, expected to be hit, the country is now conducting a series of events in key markets to promote foreign investment. The Invest Sri Lanka Forum taking place here in Singapore will showcase investment opportunities in leading Sri Lankan listed companies. We spoke with Sri Lanka's State Minister of Finance, as well as the country's central bank governor, to find out how the economy has been affected so far and how Sri Lanka plans to bounce back.
Of course, the implications of what happened will remain with us for a while, and we are trying to deal with it very, very quickly. The first casualty will be the tourism industry, and getting the tourists back will be the first casualty. So we have taken some security measures that are already in place. We have made announcements in terms of taxes to improve security in all spheres of Sri Lanka. Sri Lanka has a remarkable resilience in this kind of thing because of its past experience, and that resilience will also be demonstrated in how the economy will perform.
The macroeconomic fundamentals were strong on the 18th of April, and that has helped us to absorb the shock without too much disruption to financial markets, the exchange rate. So broadly, we are still very much on track in terms of the fundamentals. We are still on track in terms of mobilizing resources we need, because if you look at the yields on the sovereign bonds that we issued in March, even after these recent heinous events, the price is still inside the issuance price, which implies that the markets are open to us. So over the next couple of months, we will actually go and raise the $2 billion that we require, which was a planned amount, and we'll go ahead with our plans, and we will explore a dollar-denominated international sovereign bond, samurai bond, JBK issued as a guarantee, a panda bond. All these are open, or even a syndicated loan. And I should say the World Bank, as part of the assistance that it's providing, is offering us an instrument which it has called a policy-based guarantee. So under the policy-based guarantee, they can guarantee up to $1 billion US. So of the $2 billion that we plan to raise, $1 billion will be under the policy guarantee of the World Bank, which would mean that that money will be raised on the back of the World Bank's AAA rating. So that should bring about considerable tightening of the yields on $1 billion of the $2 billion that we need to raise.